Today, we're going to be discussing how investors can gain access to private market investments while keeping daily liquidity. I'm joined today by Luke Hyde-Smith from W1M, who runs the Waverton Real Asset Fund. Luke, can you explain how you achieve daily liquidity whilst also gaining access to private markets?
Well, thanks for having me on, Will. We launched the Waverton Real Assets Fund back in November 2018, and the essence of the fund was to give our clients and investors access to what we deemed really attractive underlying real asset classes across 5 core areas of real estate, infrastructure, natural resources, asset finance, and specialist lending. Now, clearly, many of those are illiquid at the underlying level, but this is a daily dealing fund, and we can only access those opportunities in listed vehicles or open-ended funds, etc. So when we designed the fund, we wanted to leave it broad from the real asset class perspective, but also broad from the investment type that we could use to access those underlying opportunities. So as a daily dealing fund, we can only invest in daily traded vehicles such as London listed investment companies, real estate investment trusts, and other vehicles which are daily priced and are liquid, even though some of the underlying assets are illiquid in nature.
So how should clients view the Waverton Real Asset Fund along something like a direct private equity or an LTAF?
Yeah, if you think about how private markets have evolved, I mean, historically, really the domain of large, sophisticated institutions who can deal with the illiquidity and the complexity of investing in 10-year lock-up vehicles, over time. Now, that's not suitable for a range of underlying clients with smaller investment portfolios, but that does not mean you cannot access some of these interesting and attractive investment opportunities. And really, there are sort of 3 main access points. There's the way we do it, which is via listed vehicles, London listed investment companies, which have been around a long time and provide access to real estate infrastructure, as I said. There's the traditional and historical closed-end, long-life, 10-year lock-up vehicles. And then there's been a bit of an evolution over the last few years in what has been deemed the sort of semi-liquid fund, which is a bit of a hybrid between the two. These are funds that invest in private markets, private equity, real estate, infrastructure, etc., but offer investors some element of liquidity ongoing. So they may deal on a quarterly basis and are evergreen in nature. So there's no fixed finite time frame for the funds to return capital. They all have pros and cons. We continue to assess the best way to access private markets for our clients. We've got an existing real asset strategy, and it's safe to say we continue to look at the best way to utilize some of these newer evergreen funds to provide access to private markets.
In your view, what segment of clients do you feel fits the Waverton Real Asset Fund?
Yeah, well, as you know, Will, we multi-asset class investors. All clients here at W1M have exposure to equities, or have the ability to have exposure to equities, fixed income alternatives. The Real Assets Fund is a key component of our alternative exposure, and we framed it as long-only, return-seeking alternative exposure, as I said, across those real asset classes. But I think if you were to think about some of that more semi-liquid or evergreen exposure, you really are then thinking about more sophisticated clients and clients who are able to take a much more longer-term view than perhaps some who are only invested in daily dealing public markets, where clearly there is some element of greater liquidity than some of the private market structures we've discussed.
So we've also seen that a lot of real asset funds are trading at a discount to their net asset value. Do you see this as an opportunity or a risk in the industry?
Yeah, so it's clearly been quite a challenging market environment for many of the London listed investment companies and real estate investment trusts. Actually, over the last 12 months or so, that's turned into a slightly more positive backdrop, thankfully. But in our mind, really goes to the heart of what we're seeking to do with the strategy. We want to own really high quality underlying assets run by high quality management teams. And if they are trading at substantial discounts to the underlying asset value, then in our mind that presents an attractive opportunity, and we're very happy to hold and indeed buy securities where we see value and the expectation that not only are you going to earn the underlying return profile, that's usually a combination of capital growth and income, but also over time that discount is likely to narrow. So we see that as quite an attractive opportunity. If you like, you're getting access to some private markets at a discount, but you've got to be very, very clear and understand what you're buying at the underlying level. If you flip it on the head, what we don't want to do is buy heavily discounted companies where we don't like the underlying, where we don't see an attractive return profile at a fundamental level.
And looking ahead to the next 12 months, where do you see the most opportunities in real assets?
Yeah, I think that boils down to three areas. The discounted investment companies remain an attractive opportunity set in our mind, plenty to go for there. If you think about some of the large mega themes that are out there across power, grid, decarbonisation, that represents a fantastic opportunity across many infrastructure assets globally. And then finally, in the resources space, we've been positive on gold for some time. That's worked well. We continue to think the gold market looks well supported, and particularly like gold miners, which we believe are early in their recovery, if you like, versus a gold price which has been very strong indeed.
Thank you for joining us today. And Luke, thank you for your time. There was some really interesting insight. Luke also hosts the W1M podcast, so please go through and have a listen to that, called Why Invest. Thank you.
Great to speak with you, Will. Thanks very much.